Holy-ish, Nvidia just had a 9% day after suffering one of the worst days in its history yesterday as of the time of this recording. I'm recording this on January 28th. On Monday, January 27th, Nvidia dropped 17% as a result of the DeepSeek overreaction that we covered on Sunday. I want to give you an update to this developing story, and most of all, because this is a trading channel, I'm going to be giving you an update on Nvidia and tell you exactly how we played it. And more importantly, if you missed the dip because you were somehow afraid, I'm going to show you what you can do from here. Let's get right into it. So Nvidia, like I said yesterday, on Monday, January 27th, dropped 17%. Now, if you watch my video, this one here on Sunday, I did that video before the market even opened on Monday. And I said, I really don't know how the market is going to interpret the DeepSeek news. This was the news that supposedly a lab out of China came out with an LLM that rivals or even is, bests the LLMs that we have currently, which are mostly US based. And supposedly they did that with much more inferior chip infrastructure, which I thought was very skeptical. But I said, if the market interprets that as a true story, we could see a decline. And in my view, you'll want to see whether the market actually believes this story. And if they do, and you end up seeing a washout here, right? Because so many people are long Nvidia. If you see a washout here, that will give you an opportunity to pick up Nvidia on the overreaction. Now, we did see a 17% drop. I don't think anyone expected this much of a drop. Why did the market drop like this? Well, what do we always hear about Nvidia? It's so juiced up. It's so juiced up. Nvidia never drops. Nvidia is so expensive. It went from 2 trillion to 3 trillion to 4 trillion faster than any company in world history. And so when something is that juiced up and there's so many derivatives played on it in the long direction, right? A lot of options. Obviously, there can be a long squeeze, right? And that's exactly what happened. All it needed was one good story to finally tip it over the edge and give it the correction that it needed. And that was that story. It was the DeepSeek story. Now, I reported why I thought that was a BS story. I want you to watch the whole video here if you're interested in that. But basically, the points that I was making, one, I didn't believe that they actually did that with only the H800 GPUs, the more inferior GPUs. Two, I don't believe they did that with $6 million. And three, this is even most importantly, what does this have to do with Nvidia? We know that as things become more efficient, demand actually grows. There's actually an economic term for this. It's called Jevons paradox. Jevons paradox occurs when technological advancements make a resource more efficient to use, thereby reducing the amount needed for a single application. However, as the cost of using the resource drops, overall demand increases. As I told you in that video, we see this with car engines, we see this with CPUs, we see this with phone technology. As things become more efficient, the use cases grow, the demand grows, and not only does the demand for those products grow, but the companies that supply those products grow. Think of Nvidia, Google, think of Amazon, what these companies were 10, 20, 30 years ago. Yes, they were considered rising stars. Look at them now. They are making more money hand over fist than any company in world history. Even if you look at a company like Microsoft, Google released basically a free version of every one of their paid Office apps, right? Word, Excel, PowerPoint. There's a free version of this that you can use on Google Sheets. And Microsoft has sold even more Office applications, right? So what does an efficient LLM have to do with not needing NVIDIA chips anymore? It's quite the contrary. And I think the market realized this today. In the long term, as things become more efficient and more accessible for companies to use, they're going to need more compute power. Today was one of the best days in the market in recent memory, definitely the best day of 2025, because I sent out an alert saying that this was a buy point for Nvidia at 118. Not only did we do that, but I also ended up selling cash secure puts, which were up almost the full value of the cash secure puts were up the next day. But I sold the 85 puts and the 100 puts on Nvidia. And I also ended up buying more shares and more leaps in my long-term account. Now let's go over the technical reasons for why I thought this was a buyable bounce. And then we'll get into what plays you can make from here if you did not buy the dip, unfortunately. I don't know who you're following if they told you not to buy this dip. But if you look at this, Nvidia dropped, right? Worst drop since 2020. But look at the price and look at the RSI. This right here is called bullish divergence. RSI making a lower low, price making a higher low. Tip number 2, if you look at the moving averages, where was Nvidia? Nvidia was sitting at the 200-day moving average. Now, Nvidia doesn't often hit the 200-day moving average, especially in a bull market. The last time it hit the 200-day moving average was actually January 2023, exactly 2 years ago. And I said this on X, by the way, even if you're not in the Traveling Trader Trading and Investing Academy, if you're not in our Discord, you will want to follow me on X. I post a lot of the stuff every single day on X and on Instagram. But I said Nvidia hasn't been at the 200 MA in exactly 2 years. I bet my left nut, not a single person who was crying about waiting for the dip has bought here. This stuff is important to pay attention to. If you want to own these blue chips, it does not take much to learn this stuff, right? The RSI or the 200 MA, all it takes is conviction to buy it and sit on your hands. The problem is everyone wants to find the bottom. Now, once in a blue moon, you do get lucky where the bottom is the actual day that you buy. And even if we drop from here, I don't care. I know that I got a great price based on its current PE ratio at 118 and its forward PE ratio at 118, which I'll get into in a second. But if you look at the last time that Nvidia dropped like this, a 15% drop back in 2020, you'll see that we had a very similar profile between RSI and price. You have price making a higher low, RSI making a lower low. This was the last time that it dropped like this. It was at or near the 200 MA, and then it rocketed from $4 all the way up to 34 bucks. So this, to me, did not scare me. Now, if you look a little bit from a fundamental standpoint, we see that Nvidia's PE ratio, this whole time, right, it trades at a pretty high PE ratio relative to other stocks because it is a massively growing company. It cannot keep up with its growth. So it typically trades as of late in the 50s and 40s. Yesterday, after the drop, Nvidia's forward PE ratio was 26. That means based on its forward earnings, its forward guidance on earnings, Nvidia's PE ratio, if it stayed at that price, at that 116, 118 price point, would have been 26. So even from a fundamental standpoint, if I liked the company and I believed in its growth and I see it where it's sitting at, and from a technical standpoint, I match that with the fundamentals, and of course, I'm going to buy Nvidia. Now, you don't have to engage in short-term call options, right? No one's asking you to do that. I actually was not, yesterday, I was not even really thinking about buying short-term calls. I even told the Discord I was not buying short-term calls. But long-term things, leaps, shares, etc. These are things that, you know, if you are going to engage with the market, you absolutely cannot ignore when blue chip stocks do these things. Now, I posted this on X as well, but recently an interview with the head of DeepSeek, his name is Liang Wenfeng, came out and said in a Chinese outlet named 36KR, he said the bottleneck for further advances is not more fundraising, but US restrictions on access to chips. He stressed the need for China to develop its own domestic ecosystem akin to the one built around Nvidia and its chips. So that's the other thing about Wall Street, right? Is that a lot of times this stuff is just all we need is one big story in order to tip something that has been growing astronomically for years over the edge. But also there's a lack of understanding. There's a lack of understanding of what an LLM is and what role chips play in it. And if you know anything about LLMs, you know that the LLM in and of itself is a commodity. The LLM is not a threat to chips. when LLMs become more efficient, and it's just one use case, by the way, of AI. But when these use cases become more efficient, then the demand for chips will become more efficient. What do you think happens when self-driving software becomes more efficient and more ubiquitous, where every single car is now doing autonomous driving? Do you think the demand for chips is going to go down because it's more efficient? That doesn't make sense. In the same way that it doesn't make sense that the demand for Nvidia would go down as one of the commodities of AI, an LLM, large language model, became more efficient, right? So if you bought Nvidia for the long term at any point, you believe in its growth story, then this LLM coming out of China, supposedly, that's if you even take it at its word, supposedly being more efficient, is not going to be the death story for Nvidia. All right, so what can you do here if you missed the dip? Because a lot of you watching this have missed the dip. I know, because I keep my finger on the pulse in the trading space, and I know a lot of people yesterday were talking shit to me about buying this. But if you missed the dip here, and I'm not saying this is the bottom, by the way, this is just a really good buy. But if you missed the dip, one of the things that you can do is you can buy shares at 127, right? You could buy 100 shares at 127, and you could sell a covered call to bring down your costs. So if we go to Nvidia here for a second, you can see that it's trading at 127. You could buy the 127 call, and then you'd go to trade options and say that you want, and this is if you want to keep your shares for the long term, right? You would go to, say, something like June, and you go far out to maybe the 170 strike price. So you go to the 170 strike price and you would sell the 170 call for 5.35. Now, real quick, here's how the math would play out. You buy 100 shares at 127 and say that you sell the call for 5.35. That means that per share, you are actually paying 127 minus 5.35, which I believe is 121.65. That's your cost per share if you missed the dip on Nvidia. Now, what happens if come June, Nvidia is 170 or above? Then you actually sell these shares that you bought for this much. You sell them for 170, netting almost $50, $48.35 in profit. And that's per share. If Nvidia is not 170 come June, you keep the 535. Your cost basis for Nvidia shares remains at 121.65. Now, can Nvidia drop below 120? Of course, anything can happen, right? But this is if you want to hold your shares for the long term. And by the way, once these expire, you can then sell another round of calls and another round of calls and another round of calls until you're either assigned or you decide to sell your shares. In my view, I don't think cash secure puts work here because cash secure puts were super valuable yesterday when we had that drop, that 17% drop. The value of all the puts went up. And if you sold puts, you could have sold stupid, dumb, cheap puts. I sold the 85 puts for $100. You can see here, I sold the 85 puts for $103. I sold 5 of them. That is free money. I did this in my public account. Now, the cool thing about public is you also get a rebate on cash secure puts. Not only are the options trade commissions free, but you get a 1% annualized rebate on cash secure puts. So it is a further incentive to sell them when you are ready. Sign up for a free public account below. It is my favorite broker right now. It's a regulated broker based in the US. Miles and miles better than Robinhood, in my opinion. But yeah, I sold the 5 contracts for $103. This is a free $500 on Nvidia. So right now, I don't think there's an opportunity to sell puts. You can buy shares if you want. In my view, I think the most optimal is to buy shares and sell the calls because the value of calls has gone up because we had a 9% day. So any sort of trail off or drop or maybe sideways price action, those calls, those covered calls will gain value. And as long as Nvidia is below 170, you get to keep your shares, assuming the 170 June calls is what you go with. You can go with what you like. But I think the DeepSeek news makes Nvidia even more desirable for the long term. And I still think that Nvidia actually hits that 163 profit target in the midterm. And I also saw this little tidbit report here, but it says retail investors bought record 562 million in Nvidia stock during Monday's DeepSeek rout. But yeah, just like I told you in that video from Sunday, if the market reacted to that news badly, then you will get a chance to buy Nvidia in a washout. Nvidia washed out even more than I thought, even past that 127 level that I was looking at, and gave us an opportunity to buy it really cheap. I don't think we are out of the woods just yet because, we have the FOMC coming up. There's a lot of ancillary factors coming up this year, but getting it at 118 is a price that I don't think a lot of people were able to get for most of the last year and a half or so. Now, I'll leave you with this. Apple also had a massive couple of days, up almost 8% in 2 days, bouncing from that technical level at 220. And surprise, surprise, yes, I told the group Apple is at the support level of 220, down 16% of highs near the 200 MA. This is not a swing trade. An ad if you are looking to establish a long-term position. If you are only interested in long-term positions, I kept the price of the Discord at $35 a month. That is nothing to get these insights, in my opinion. So if you're only interested in long-term, that option is there for you as well. If you want to trade live with me every single day, that option is below as well. Hopefully you guys learned something. Hopefully I helped you stave off the panic and contextualize things. I will be doing a free trading webinar on February 2nd. First 1,000 people that sign up get in. We are almost at capacity. It's live. It's not recorded. It's taught by me. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.